Morning, everybody. It's Wednesday, May 15th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Quickly here, overnight markets had July corn up 4 1/4 at 471 3/4. July soybeans were up 10 1/2 at 12.25, and July Chicago wheat was up 15 1/4 at 687 3/4. This morning, the USDA announced an export sales announcement, 180,000 soybeans to unknown destinations. 120,000 of that total was for 23, with the balance coming for 24. Also had CPI data out this morning, came back a little bit better than expected at 0.3% for April. Estimates were looking for about 0.4%. So just slightly better on that data. Outside markets took kindly to the news. Stocks rallied about 150 after the number. Good morning, guys. Nice to see everyone. Not much really in the way of fresh news here this morning. Ben, maybe a few thoughts to start just on, I guess what happened overnight. We bought it pretty good here this morning on the close, but a few thoughts to get us going, and then we'll move it around the room.
Yeah, I think the story is kind of what we've been talking about. Uncertainty. A lot of variables in the balance sheet at this time of the year. From a technical perspective, we're slightly above the 200-day moving average. That's resistance the first time up, maybe the second time up, and that would be an accelerant to maybe see a final round of short covering. We've discussed before on here is that the place where some of the automated people decide to get long, or does an end user ever get nervous enough to want to chase the market higher? And I think that's what it would take in order to see, an extension beyond just another round of short covering above the 200-day. We've seen an overwhelmingly, bearish 7 or 8 months in the corn market. So I think that we have to have a reset of the things that could happen and might happen or might not happen. And right now we're flirting with a pretty significant number with the 200-day in corn. A lot of that covering that we saw the previous week, we think was absorbed from grower selling and pitching a lot of old crop bushels on the heels of a pretty significant bounce. To this point, we're at about a 10% rally, maybe a slightly more in the corn market. So we'll see here what we can put together if we can find some traction on above the 200-day moving average. I think there's still some shorts in there, and a move above there, could incent another round of covering. With the weather forecast not being as dry, I think, as people would like. Looking into Friday and then what Sunday night weather looks like.
Yeah, Ben, I was just kind of looking at the December corn. Outside of this week, we've only traded above the 200-day for 8 days in the last year and a half.
Wow.
So kind of put that in perspective about, I think, the importance of these levels. Obviously, it's the $5 mark, and you can see why people are selling against it because it hasn't stayed above it for more than a day or two at a time. Yep. So,
and that, the 200-day moving average is a number that it attracts a very non-active trader. They're longer-term players, and they look at that as their barometer of the market. So we can see around these numbers a lot of grain trading hands, a lot of volume, and then does that long-term short who doesn't, they're not looking at, I'm up X amount on this trade. They're going to exit when their strategy says it's over. And do we have enough here to trigger that covering? Corn, I think that we're in agreement that corn is undervalued relative to beans and wheat. So I think it's having a little bit of an open mind here of what we can do and think about, what do you want to do at XYZ and how do you want to approach it? So, contingency planning in these types of markets are extremely important in executing a plan.
Yeah, 100%. That too, that is a good point, Ben. The 200-day, I think that's for me, a long-time fundamental trader that, I've known for a long time, he's retired, but the 200-day was their big, are we entering a bull market or a bear market? If you're above 200-day, you trade as a bull market. If you're below it, you trade as a bear market. So kind of interesting that all these things, probably not coincidental, but that they're all kind of happening at the same time, where you get, the funds, kind of flat with the farmer selling at the same time you have these big moving averages. So it's kind of a reset, really.
Yep. And it's funny. People say, well, the managed money is underwater. Managed money is not underwater. They're still profitable for the most part. I think people started really putting on heavy short positions at 540 to 550 and added all the way down. They've collected over 50 cents in carries. So it's their MO on trading. They're not an active day trader. They're not a weekly trader. They're in things for longer term moves. And when their system turns, they turn. It's not an emotional execution for them. So hopefully they find enough uncertainty here to clean up the rest of that short. And it would really be nice to see them get long going into mid-June, but you just don't know if the appetite is there for that kind of risk. So
yeah, absolutely.
Well, and you look at outsides too. I mean, let's not take a victory lap too much here, but you did get a little bit of better inflation data here this morning, and it appears that the administration wants to get to a cut in some capacity. Do you see some money moving, from commodities back into, maybe a bigger equity play as we go into election season?
I don't personally. I mean, I think if the inflation talk's still on, they're going to want to be long commodities. I think that the big short, you're actually, we talk about the managed money, which are, the traders, but the index funds have been adding back. They were out of a lot of commodities over the past, year. If you look at the last few commitment of traders reports, they're coming back into the markets. So I think that's more of an inflationary trade. I think we've been trading deflationary, thinking that, inflation will come under control. The big question will be if the market starts thinking that this inflation is a little stickier, you're seeing copper, some of these other things, gold, silver, reinflate, does that, I would think that would attract more money to our markets as far as like the passive investor.
Oh, that's good. That's good info.
Well, and I'm just going to add that too. I think that the index fund is an interesting component of our markets because it can be a very large presence at times, and it's not going to get shook out, like your typical trader on a 10 or 15 cent pullback, and it's not really going to sell on a big rally either, right? They kind of move at these are really long-term plays. And the index fund, probably more than any other component of the commitment of traders, creates somewhat. We use the saying historically for people that our market is for every buyer there's a seller. When the index fund is long, that doesn't always remain the case because they're not a seller at 50 or 80 or $1 higher, right? Mm-hmm. They're not there to let the other person out, and we've seen that play out repeatedly in the wheat market over the years.
Well, that's the thing is that, the comments about, the managed money short 200,000. So, they're way smaller than the farmer long, which is true in a lot of cases. But now at this point in time, you start looking at those numbers and you look at the index fund long, that offsets the natural seller of the farmer, right? So there's a bigger balance of, I think, these markets than we've given credit to, or the market in general is given credit to, thinking that the farmer's just this giant long. That was a story from 6 months ago. I think so much has been cleaned up. I think the market's really in balance. It feels like it to me. Not that there's not still stuff that farmer has to sell. They obviously do for new crop and things like that, but way more balanced than we were 6 months ago, or even the last time we were at these price levels, back beginning of the year.
And that should add a level of excitement that we have cleaned that piece up, because that was a huge weight on the market. And now at least we've got back to what, you could call it the fundamentals of where we're at, Yeah.
And you'll still have periods, right? I think, you go into first notice day of July, you'll still have some, the last wave of that basis only contracts that has to price, or, you saw July D spreads widen, yesterday. So you're gonna have moments of that, but it was a Goliath, going into the first of the year, and we've chewed through that on a down market, then sideways, then up. We've chewed through a ton of corn, and that was the market's job. So again, just kind of reiterating, I think we're in balance. That it doesn't mean we're just going up from here either. It's balance. So if they want to start building a big short because the fundamentals look really bearish again, like it's also cleaned up that way that we can go down. So
yeah, it's going to be interesting to see the next 5 to 7 days, how after it we get, right? I mean, guys are excited to go. They're ready to go. We get a little drying period. It feels like the models are in agreement. And then you get to 10 days and it's, all bets are off. It could be wet again. It could not be. So that'll be interesting to see.
Yeah. I mean, I think we're going to get it planted. Just a matter of like, okay, last year we had a really good start. We had, got it in great conditions, fast plan, so we had fantastic stands. We had everything, I think, was about perfect for the, as a whole for the nation. This one's not, it's not horrible. It's not great. It's just kind of average right now. And it could get worse but with the starting point that we have in corn with a 2 billion carry out using a 181 yield, I think that's just the underpinning bullish factor of corn. It's not going to take long every year, right? I mean, every year you have they're going to start talking, what if we're 170? What if we're 160? And that happens every year. Ben and I were talking yesterday. I mean, outside of, that year where you go 5 or 10% above trend, that would be obviously the black swan. But other than that, I think we're going to be, have some better support than we did last year, even for corn, at these levels or lower. That's
good news. It's exciting to hear, it's rather than the flip side and we have to find demand. I mean, at least now we got to grow a crop. We have to produce.
Well, I think what's exciting is that we found demand, 460, 470. I mean, our exports were gigantic every week.
Yeah.
Export inspections. So we did find demand. We went to a level where we found demand. Our export pace is fantastic. Obviously a lot of that, most of that's been Mexico. Which, you could argue that maybe they're front running, some of these non-GMO changes or some things like that. But either way, our demand was good on ethanol and exports and feed from the, based on the stocks numbers. So I think we did get to levels that we found really good demand, and that's not that far from here. You're talking about 30, 40 cents lower. Okay. So we do have a level where we found, a really good amount of demand. So that's encouraging to me too.
Oh, very good, guys. Right, we got a couple minutes here. Real strong day across the livestock sector yesterday. We were talking before the show. Beef prices continue to be the leader. So, what's your thoughts there?
Yeah, I mean, 2 consecutive days of huge gains in the beef. This is what the market really wanted to see. This has been kind of the focal point, just because we've seen a lot of this kind of negative price action, contra-seasonal price action, and just kind of a steady cash market. So I think right now you're seeing a lot of optimism. It looks like we had a lot of new buying yesterday too. Open interest was up 3,600 contracts in the live cattle complex and up 590 in the feeders. So it just seems like we've been really waiting for this to happen. I mean, I don't want to say just 2 days is, this a trend at this point, but it's definitely starting to get people a lot more optimism, especially just because the market seems like it's been kind of straight down, just for the past few weeks here. So maybe it's going to help really tighten up this basis a little bit, because you've got this huge discount on the board. It's likely to probably still continue to tighten up here, especially if we're going to see a higher cash trade, 186, 187, 188, 188. So it's what we're waiting to see. Nothing yet on the cash side, but still something to watch. Hopefully we could see a little bit of this bleed into the pork cutout too. Funds are still kind of liquidating here. Another 33,000 contracts taken out of open interest. So commitments still going down, and we're just June's hovering right by the 100-day moving average. So we'll see. Usually once we get out of May, we could see a little bit of a short covering rally here. So we'll be keeping an eye on that. Hopefully we see bellies and pork start to firm up here.
All right, buddy. Appreciate that. Just coming into the open here, we got July corn's up 5, 472.5 is the last. July soybeans are up 14 3/4 now, 1229.5. And July Chicago wheat's up 20.5 at 692 3/4. So real good start to the morning here. Every day that the markets are open, We're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate all the thoughts and comments here this morning, guys. It was a good conversation. Hope everybody has a great day, and we look forward to talking to you tomorrow.